Hello and welcome. I am Matt Taylor and this is my variety channel. Today I have another cryptocurrency video for you, and I'm going to be talking about the top mistakes that you should avoid while investing in crypto. And so these are just things to be aware of, especially if you are new to crypto, or maybe you are a seasoned investor. Some of these things you probably already know, but it's good just to have a refresher. Also, while I am talking about these mistakes, drop a comment down below and let me know your experience with these particular things that I am talking about. If you've experienced the same things, if you've done the same things, and lessons that you may have learned. Also, other ideas that you might have to help others that might be watching. And before I move on, make sure to subscribe to my channel and hit that notification bell so you don't miss out on any of my new videos. Also, smash that like button. It'll really help the video perform better with the YouTube algorithm. And let's get started. So I started in crypto late 2017 and early 2018, back when the market was super hot, the previous hot streak for crypto. Obviously it's more hot now, but so I got in back then. So I've been in for 3.5, almost 4 years. So 3.5 years, I guess. And so it's been quite a while. It's been a fun ride in the crypto space. It's still 3.5 years. It's still not a ton of experience in crypto. There's people that have more experience, but I've learned quite a bit of things in that time, and hopefully things that I share with you might be of value. If not, I'm sorry. So the number one mistake is putting your eggs in one basket. So kind of the age-old, that's the age-old investing thing, is don't put all your eggs in one basket. And that can be applied to a lot of things in life, not just cryptocurrency investing or investing in general. But the idea is, let's say you have a basket of eggs and all of your eggs are in that basket. You just got them all from your chickens, and then you drop the basket and they all break and they crack, and then they're no good to you. Or something, you set the basket down and someone steps on it or something. There's a lot of things that can happen, and that basket of eggs are ruined. But if you had those eggs spread out in a variety of baskets, if something happened to one of them, you still have others to fall upon. So that's kind of the idea. It's kind of an easy concept, I think. Don't put all your eggs in one basket. And so in our case, don't invest only in one crypto. Now, you would probably be fine if you invested your whole portfolio in like Bitcoin or Ethereum. You could probably be okay with that. And if you're very new to crypto, those are very good cryptocurrencies to start with. Lower risk. They all have risk. All the cryptos have risk, but lower risk in those than a lot of the other coins. And another thing to go along with this topic is don't only invest in low cap coins. So when I first got in, I would buy with Bitcoin and then spend my Bitcoin and buy all these low cap coins that I thought would have a potential to do 3, 4, 10x. And I was going along with people in Twitter and on YouTube just talking about different coins, massive potential for XRP or massive for Tron, which were some of my first coins. I first bought Bitcoin and then Ethereum, and that's what I used to buy coins like XRP and Electronium and Tron and Deep Onion. Those were like my first 3 or 4, 5 coins that I bought. But I didn't hold on to any of the Ethereum or Bitcoin. I just used that as a vehicle to buy those other low cap coins. So there you go. That's kind of the story with that. Is I wouldn't, even though I know you could have FOMO and you see this coin and people keep hyping it that 10x, 100x, 50x potential, and then you want to buy in. And I'm not saying don't buy into those. You got to be cautious, obviously, especially if they're brand new coins. But don't put all your money in those coins. So diversification is key, in my opinion. And there's a lot of people that will say that. Also, or here's an example. For example, I bought BNB, and if we look over here at CoinMarketCap, I bought BNB probably when it was around 230, 240, somewhere around there. And I was only buying BNB so I could buy stuff on like PancakeSwap. So, and the funny thing is half of those coins that I bought on PancakeSwap tanked after I bought them, and they still haven't really recovered yet. And so I would have been better off just holding that BNB instead of using it to buy other coins, because if you look, it's like I would have tripled my investment in BNB. Now, some other coins that I bought with BNB performed better, so it's overall I'm still up, but that's just things to be aware of, you know. And such is life with crypto, right? You buy one crypto and use it to buy another coin, and anyway, it's a fun crypto experience. Okay, so the next topic is don't buy it all at once. Let's say you do want to buy Bitcoin, or you want to diversify. You know, there's 3 or 4 coins that you want to buy in, and you have maybe $500 that month that you want to spend on crypto. Don't, like at the beginning of the month, don't just use all $500 right then. Take more of a 401k approach, which is dollar cost averaging. For example, my 401k, I invest X amount every month. And then I put it in regardless of what the market is. I don't even look at the market. I just invest once a month. Now with crypto, a month might be too long of a span for you. So maybe take that $500 and do it once a week. Maybe do like 125 the beginning of the week, and then the next week another 125, and spread it out amongst the cryptos. And maybe, you know, 50% in Bitcoin, or 25% Bitcoin, 25% Ethereum, and then 50% in some smaller cap coins. I'm not going to get into the strategy there because totally you can do your own strategy. These are just kind of my thoughts and opinions that just diversify, and then you'll be able to mitigate your risk that way. Also, instead of buying it all at once, and also even when you're buying periodically or doing the dollar cost average, you might consider doing a limit order. Now, a limit order is a little bit more technical than a market order. A market order is which most beginner investors, they're just going to do the market order. They'll just, because it's the easiest thing to do, especially like on just Coinbase, you can just buy, sell without even worrying about it. And the market order is just going to take it whatever the market happens to be at that time. Once you buy it, you're going to buy it for that price. And if it has a heavy volume like Bitcoin, you won't lose too much on a market order. But if it's lower volume, there's a potential for the price to swing quite a bit when you place that market order, and that may not be what you want to do. So you could try a limit order. And so I'll just show you an example of a limit order on Coinbase Pro, but it's going to be the same on any exchange that offers limit orders, and most of them do. And so let's say I have, and I'll do like kind of a buy and a sell limit order. And let's say you wanted to buy Bitcoin, but the market's going up and you're just not sure. You think that it might go down. So what you can do, let's see, the market price right now is at 50,000 or 57,000, let's say 950. What you can do is you could say, I want to place a buy order. I want it to be limit. Just click on limit, and I want to buy 1 BTC. This would be awesome if I had this kind of money to spend on BTC. But I think the market's going to go down, and I don't want to pay what the market price is. I want to pay 56,000. Okay? And so once you place this buy order, it is not going to go through until Bitcoin drops to 56,000 or below, and then it'll execute your trade. So that way, you wound up buying it at a lower price and got more for your money. Okay? And the same is for a sell order. Let's say it's like 10 o'clock at night and a particular coin, your favorite coin, is like just peaking like crazy. It's mooning. and you're like, I think it's going to go up. I don't want to buy it right now with the market price. I think it's going to go up a little bit more while I'm sleeping, so I'm going to set a limit sell. So let's take Bitcoin for an example, and I'm going to take that same BTC, 1 BTC, and I think the price, while I'm sleeping or not paying attention, I think it might go up to 59,000. And so what I'll do is I'll just put this 59,000 there, and then I'll place the sell order. And what's going to happen is it's not going to sell your Bitcoin until it reaches that price that you set, in this case 59 or greater. And then so you made a little bit more on your money as opposed to just going for the market order. Now, I'm not saying market orders are bad, and there are times where you may want to just do a market order quick and just not worry about it. But a lot of more experienced investors, they'll do limit orders or stop loss orders, things like that. Now, the next topic. Don't have a get rich quick mentality. My approach is more of a long-term approach. And it's easy to get caught up with the FOMO and get rich quick, and I'm going to invest $1,000 and in 1 month I'm going to have made $20,000 or whatever the case might be. Certainly you could take that approach if you want. I caution against that. You just probably will get disappointed if that's the way you think. But for me personally, I like to have the safer investments, diversify, and then I will play with more speculative type coins, brand new coins that I think are going to do well. I might do $200 or $300 in that coin, and if it tanks, it's not going to hurt me at all. But if it does well, great, that's awesome. So once again, my approach is more long-term, and also it helps that if you have a plan, an exit strategy, if you will, a plan for taking profits along the way. It's always a good idea to take profits along the way, maybe 10% here of a particular coin if it's going up, 10% there, or whatnot. And then maybe you might want to recoup your investment, your initial investment first, and then everything left after that is just pure profit. Well, pure profit minus any government taxes. I won't get into that. Also, along with this get rich quick mentality, which you shouldn't have, don't chase every single shiny object coin that you see trending on Twitter or random YouTube people like me talking about on YouTube videos. There's plenty of people on Twitter that are like, oh, check out this move, check out this elongate coin, check out this bonfire coin, it's gonna moon, it's gonna do 400x, yada yada yada. Don't fall prey to that. I'm not saying you shouldn't invest in those. You may want to do your own research, check those coins out, and make sure you look at the market. For example, when BNB was hyped way up or doing really well, it kind of would have stunk if you bought right here on April 12th for 585, and then all of a sudden it goes down to 465. That's kind of a gut punch, and you feel really bad, and you might have a panic sell, and you'll wind up selling for a loss. But then again, if you would have just waited and held and held and held, it would have gone up to 624. So there's some patience there, and if you do happen to buy when it's high, if it's a good coin and you hold, then chances are pretty good that it'll recoup and go higher. Of course, it depends. It's cryptocurrency. Anything can happen. Also, the next topic is don't ask your family for money so you can buy crypto with it. Don't borrow from family. Also, I would throw in there, don't borrow from the bank or just take out a loan to buy crypto with it, because all of a sudden that adds immense pressure on you. And it just really, really hypes up the pressure, and then also guilt. You'll feel guilty, especially if you borrowed money from your parents or something like that. I know this sounds probably totally basic and no duh, but I'm sure people have done it and they might have lost out. So I just totally caution against borrowing money to invest in crypto. The next one I want to talk about is investing more than you can afford to lose. Don't invest your rent money. Don't invest your food money for the week in crypto, thinking that it's going to 2 or 3x the next week. It could happen, but it also could tank 2 to 3x. And then you might panic because, oh, you need some money to pay for your rent, and then you sell it at a loss. And it's just, to have that amount of pressure on you is just not really good. So my thought, and it's just the basic approach that most people knows, don't invest more than you can afford to lose at any one time. Maybe just have some savings built up, maybe a little crypto savings where you put some money in there each month or whatever from your paycheck, and that's just money that you're going to play with and that you want to invest with. Whatever you want to invest with, you can invest it in stocks, invest it in crypto, and that's just money that you know that if you have something happens to it, it's not going to affect you too much. That would be my advice, and then follow those other advices too. Diversifying, dollar cost averaging, all those kinds of things. And then let's talk about realized versus unrealized gains. I love it when people say, "Oh, I just made $100,000 or I just made $20,000." Did you though? You only did if you sold it. Those are so unrealized versus realized gains. It's only a realized gain if you actually sell it for fiat. So even though it goes up, you didn't really make that money until you sell it. Also, you didn't really lose that money until you sell it. If the market goes down and you don't sell, you didn't really lose it. That is unrealized losses as well. But if you do sell, that becomes a realized loss. And fortunately, at least here in the United States, you can put those on your taxes, your losses. But just keep that in mind. You didn't really win, and you didn't really earn, or you didn't really profit until you sell, and you didn't really lose until you sell as well, if you sold for a loss. And then my last topic is yield farms. Yield farms always promise a super, super high return, and they are good. Some of them are really good. Like I love Pancake Swap, and that was one of the main ones that kind of first came on to the scene. I love Pancake Swap, and you just have to be careful. Like for example, a lot of these yield farms come out and they promise like 10 to 12,000%, and your FOMO starts happening. Oh, if I don't get in now, I'm going to lose out on that percentage. So let me this is something that I fell prey to, Alpaca Finance. Now, it wasn't very much, but so when Alpaca Finance first dropped, the very first day, I thought I was awesome. Like I got in like 6 hours after it launched. And I was like, this is awesome. I rarely get in this early on a coin. And right when it was released, it was at $8. And so I waited for a little bit and I bought it like at $6.50. And then within just a day, it already dropped to $2.07. Now, I did take my own advice and I only did like $300 or $400 worth. So, but it still was a gut punch. Like, man, that was dumb. I'm like, well, I'll just wait. I'll hold because it is yield farming. So I have it staking and I'm earning more and more coins. So if you hold long enough, eventually you can, get those back. But you have to hold a long time sometimes for that to happen. And it went down, 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 down. And then it was at one point like 70 cents. And I'm like, man, that was really dumb. And then it started going up again. It went up to $3, $4 even. And now it's huddling right around $3. So that was cool. I didn't keep buying during that time, so I could have taken my overall average and dropped it down. I didn't dollar cost average on this coin. For me, it wasn't really something I wanted to do, so I didn't do that. But that just gives you an example. Be leery of the yield farms, brand new ones that just right when they come out, promising these huge returns. Just take a step back and wait a few days and let that price equal out before you decide to get in, and that might help you from some headaches. Anyway, those are my top 7 things to avoid when investing in the markets. Let's run through them one again. Don't put all your eggs in one basket. Don't buy all at once. Maybe take a dollar cost averaging approach, and also consider doing limit orders instead of market orders. Don't have the get rich quick mentality. Don't ask your family for money to invest in crypto. Don't invest more than you can afford to lose. That's just an age-old saying. And just remember realized gains versus unrealized gains, and realized losses versus unrealized losses. and just be leery of brand new yield farms. Also, just new cryptos in general. And always do your own research. Don't just take the advice of random YouTubers like me and random people on Twitter who aren't financial advisors. And trust your gut, and that can probably help you out. So hopefully some of these ideas helped you. Drop a comment down below and let me know your thoughts and if it was helpful or not, and if you've had done some of these mistakes yourself, and if you have other tips for people. I mean, we can all learn from each other. Once again, my name is Matt Taylor, and this is my variety channel. If you lasted this long on the video, check out my main channel, In the Kitchen with Matt, where I teach all really cooking, like how to cook awesome recipes and things of that nature. If you love food, you'll love that channel. Until next time, happy trading, everyone.